Ever wonder what the stock price of Tesla will be in 2030? Regarding the future direction of the premier electric vehicle company's stock, experts are divided. To learn more, keep watching and listening. Many individuals think that investing in stocks, especially those of well known firms or brands, is a wise long term move. Though opinions on whether Tesla's stock is overvalued or undervalued are divided, it is unclear if the firm is worth investing in. You will learn the Tesla stock price in 2023 from Dave Lee in today's video. Dave Lee consistently expresses his belief that he is in this business for the long term and is still enthusiastic on Tesla stocks. He continued by saying that, in his opinion, Tesla will have phenomenal growth by 2030. Renowned YouTube content producer Dave Lee offers his opinions on the vision and justification for investing. He talks on the astounding potential of assets to work and expand, as well as what is not taught in schools about investment. He describes his channel as a stream of consciousness of his current ideas about the world and investing. Lee is also referred to be a Tesla bull and fanatic. His channel covers all aspects of investing. He just wrote a piece detailing how he raised the first funding for his Tesla stocks, which were valued at about 100 times their true value. He revealed that when he first purchased Tesla stock, he anticipated that the company's market valuation would grow tenfold, from $3 billion to $40 billion. Lee added that the past might replay itself. He claims that the same mistakes that were made with the original iPhone are being made with Tesla. He is adamant that Tesla is only beginning its journey toward innovation that embraces complexity. After acquiring common stock for 8 years, the well-known YouTube investor revealed that he was taken aback by the 100x growth in his Tesla stock. As a result, he thinks that in another 8 years, the stock might rise even further, possibly even 100 times higher. The well-known YouTuber claimed that many people merely rely on their comprehension of the earnings report to determine how their preferred company performed, rather than giving analyst estimates for EPS, or earnings per share, revenue margin, and other indicators. Careful thought. The issue with this approach, in Lee's opinion, is that some experts are unaware of the bulk of common stock shares. According to him, some analysts even work for companies where they are stockholders without ever having owned any stock. As a result, they seem indifferent to whether the company is making money or not. Analysts' and investors' expectations for fledgling, fast-growing companies are typically at odds, yet Tesla has effectively outperformed them. For instance, Tesla's first and second quarter results surpassed investor expectations while exceeding analyst estimates. According to Lee, a company's revenue production determines the value of its shares. One of the reasons for Tesla's poor performance in the first and second quarters was restrictions, which also prevented the stock from hitting an all-time high. It is well known that when China imposed a zero-COVID policy in response to the global pandemic that struck in 2020, Tesla's Giga Shanghai factory had to temporarily suspend operations. Nevertheless, Tesla seems to be in control, as seen by its success in the first 2 quarters of 2022. Lee stated that for Tesla to continue its optimistic ascent, revenue growth is required. He continued by saying that every quarter, they should deliver more cars than investors expected, and that their revenue should likewise above their projections. It is reasonable to anticipate a rise in stock price, given Tesla's goal of increasing output by 50% by the following year. Lee even made a suggestion that Tesla's stock would reach $1,150 before the year is out. Dave Lee provided his projections for the next 2 quarters through his channel shortly after Tesla's second quarter financial report was made public in July. He continued, "Let's take a look at what the next 2 quarters might look like, because investors are looking forward. They are not just going to dwell on past numbers." What do you predict Tesla's value to be in 2023? Post your ideas in the space provided for comments below. According to Lee, there will be more than 1.4 million cars for the full year if that Tesla reaches their 50% year-over-year growth prediction target. They must be able to supply 385,000 automobiles in the third quarter and 455,000 cars in the fourth in order to meet that goal. Car sales in the third quarter should be roughly $20 billion, and in the fourth quarter, $24 billion if that occurs. Less than half of the regulatory credits from the second quarter, $200, were awarded for the third quarters. For the third and fourth quarters, the gross profit is around $6.5 billion and $7.8 billion, respectively. It is anticipated that gross margins will increase from the second quarter's 29.3% to 31.9% and 32.3%. Revenue for the third quarter is expected to be $22.7 billion, and for the fourth quarter, $26.5 billion. GAAP gross margin will be approximately 29.7% and 28.9%, respectively. Based on Lee's research, the end-of-the-year price of Tesla's stock is expected to be approximately $1,150. This valuation of the EV firm shares is not all that dissimilar from what other investors have paid for it. Nevertheless, it is anticipated that by 2023, Tesla will be valued at more than $1,150. The majority of estimates for the price of Tesla stock for 2022 alone indicate that if the stock increases by 35% this year, it may reach $1,200. That represents the average growth estimate from over 30 analysts. One of the more pessimistic forecasts comes from the experts at JP Morgan, who have set a $250 objective for December 2022. According to Tesla's price prediction, the company's stock would be valued at approximately $1,600 by 2023 if its projected 35% growth rate holds true. Even more optimistic predictions call for an annual growth rate of 70%, which would put the price at $2,600 by the end of 2023. The majority of longer-term projections for Tesla's stock price place it between $1,000 and $5,000. Though forecasts longer than a few years are more conjectural, it is still feasible to project the size of the market for electric vehicles and set Tesla's price appropriately. According to the middle of the goal range of individual members' expectations, the Fed's benchmark rate will conclude the year at 3.4%. This represents a 1.5 percentage point upward revision from the projection from March. The committee projects that in 2023, the rate will reach 3.8%, which is 1 percentage point higher than anticipated in March. Conversely, Tesla keeps up its strong performance in every area. In order to achieve significant manufacturing production and speed increases, Tesla is constantly introducing new technologies, such as dry cell batteries, gigapress, and new metals. These developments portend well for the company's future. The new 4680 batteries and the front and rear casing should be produced by Tesla Shanghai and other sites by 2023. By the end of 2022, Tesla hopes to have 2 million cars produced annually through its Shanghai factory. From 2024 to 2025, this goal will be raised to 4 million autos annually. As of right now, Tesla Shanghai is producing 1.1 million vehicles annually. This is anticipated to boost earnings. By the middle of 2023, the eagerly awaited Cybertruck is also slated to be released. In actuality, there are quite lengthy wait times for Tesla orders. Emmanuel Rosner, an analyst at Deutsche Bank, was asked about his opinions on the concern over the rate of demand given the possibility of a worldwide recession. He responded that they can monitor the wait times for cars once a reservation has been made using their current data. He said that wait times have not decreased. Generally, depending on the model and location, you would need to wait several months, sometimes even until 2023, to receive your Tesla. It should be mentioned that in June 2010, Tesla stock made its debut on the Nasdaq stock market. The business made a massive $2 billion bid at the time. On the first trading day, however, the stock price increased by about 40%, closing at $23.89, raising slightly more than $226 million and increasing the company's valuation to $2 billion. As the market leader in the electric vehicle sector, Tesla is still at the top of the game today. But by the end of 2023, Jess Toprak, a veteran of the auto business and chief analyst of Autonomy, a subscription-based provider of electric vehicles, predicted that Tesla's market share will drop below 40%. They will get a lesser portion of a larger pot, even though their sales will rise as the market as a whole does. Toprak said, but their near monopoly on EV sales in the US will slowly diminish. Check out our other videos on our channel for more information about Tesla stocks.